There's so much activity. There's so much press going on about Bitcoin. It's in the news every other day. It's always on CNBC. It's always talked about on Bloomberg. I don't think that I think there are way too many eyeballs on Bitcoin right now for people to forget and allow prices to drop down to $1,000, $3,000, or even $4,000, whatever it is. I think that there's going to be way too much of an appetite for people to buy Bitcoin and other cryptocurrencies that they think has long-term potential to hit 20K, 50K, 250K. Because at the end of the day, investors aren't going to care if they get in at 3K or 4K. They're going to care that they got in. It doesn't matter about $1,000 difference when at the end of the day you're going to be making $5,000, $20,000, $50,000 on top of what at least you're perceiving that you're expecting that you're going to be making that much. You just want to get in the market and lock in those returns and lock in that position right away. So again, I just think that this really is pretty obvious here that this is what we're seeing, and this is really the sentiment that's going on, and there's so much demand on the buy side that there's really no way that it can kind of dip any further. Again, I could be wrong, and the bottom line when you go down to it too, if you want to see green, you're going to see green in the charts and your fundamentals, whatever it is, and the same goes for bears. That's why it's super important for you to kind of be impartial about the news that's coming in and approach the market with an open mind. Again, we don't know what's going to happen. All we can do is take these educated guesses and figure out what could potentially happen. When Bitcoin shot up above $1,000 for the first time, people might have thought that it was going to keep on going to $2,000, $3,000. There were folks that were taking out loans when Bitcoin was at 17K, thinking it was going to go to, again, $35,000, $40,000 in 2 weeks. But clearly that wasn't the case. There was way too much optimism in the market, and of course that's where we saw it bottom out. But again, there's going to be a lot of fundamentals at play that are larger than what's going on currently in the cryptocurrency space alone. There's going to be economic factors, regulatory developments, and geopolitical upbringings that are going to kind of shape and mold the market as we see it. So as countries kind of come out with regulations and are open-minded or closed-minded about Bitcoin, that's going to shape the amount of adoption that we're going to see in these countries. So again, with Malta being very bullish and open-minded to these cryptocurrency projects, that's where we can kind of see these companies go into their sandbox and play and kind of innovate a little more than they would be able to in countries such as the United States that are kind of hanging on the precipice or the cusp of potentially hampering regulation that could lead to, I guess, a bearish sentiment more so than you would see in other provinces that would allow for more creativity and more growth. So again, just that's my take. That's what I've been seeing, and I mean, we'll see after tax season wraps up tomorrow. Personally, I think it would have already been baked into the price, but again, we'll see what happens. I know you can file extensions for taxes, which would kind of lead you to September, October. But again, we'll see what happens, and I definitely think that there is going to be some heightened interest in investment opportunities in the space with ICOs, venture funds that are popping up for these platforms. But again, I definitely think that there's going to be continued competition, and that definitely won't go away. So I just think, bottom line, that is something that you should be watching for as an investor and understanding what projects, again, have these long-term fundamentals that are going to play out in the market. Because again, in a bull market, everything's going to take care of itself, but it's picking the investments that are going to see those larger returns that are really going to get you the better bang for your buck and actually make it more rewarding than would just necessarily be throwing darts at a dartboard, which again, you don't want to do in any context of any investment decision. Now, for where's blockchain, we're just going to run through this one really quick. It's so today's where's blockchain is really looking at the booking process with hotels. So again, if you're trying to go on a vacation, if you're going on a business trip, there's a couple ways that you can get a room. So again, number one, you can do a direct booking for that hotel. You can go online and try to figure out like a perfect hotel. You can find out a room for you, how long you're staying, if you want to do a single, deluxe, whatever it might be. Or you can go to an online travel agency. You can go to these websites such as Kayak. I believe Trivago is another one as well. That might be for flights. But again, the idea there is the same. You can go to an online travel agency. You can go to a travel agent. But the thing is that there's so many players in between the traveler and the hotel that are all grappling and kind of scrapping for these commissions, that this leads to a lot of inefficiencies in the process. Number one, information is siloed within each of these each of these companies because they don't want to share information. They want to make sure that they retain all their information. And again, it's not, the incentives aren't in line for these companies to share data with each other. So because of that, there's these fragmented computer systems, and it's much harder to kind of exchange information. And again, that's where these bottlenecks come into play, where if you're trying to get a payment across, you have to confirm information from one group to another. And again, that leads to delays, that leads to extra costs, and again, these high commissions because there's so much competition, or there's such a demand to kind of take these profits in the space. And again, as a result, the user experience sucks. Nobody wants to deal with this. I mean, vacations are great, but the actual idea of getting a vacation set up is far from it. There's little transparency in the process. And again, if you're trying to reconcile and audit these platforms and understand what's going on with their bookings and kind of like what hotels are potentially overbooked or underbooked, or what rate changes, are being applied with these hotels, it's a bit of a nightmare. And again, this is the traditional map of the hotel booking process. And ideally with a blockchain system, Book Local is one company that's kind of looking into this. Again, this is not a vetting of Book Local. This is just looking into kind of their business model and seeing how blockchain could potentially apply to the hotel industry. And again, just kind of looking at what they're doing here, it would basically streamline all these processes. So you are connecting the traveler with the hotel, and you're connecting them with Book Local. So again, the booking process from check-in to the reservations to the checkout and confirmation, it's, I guess, conjoining identity and payment into one. So you would be able to use your public address on a blockchain ledger to identify a hotel using smart contracts, verifying and validating your identity, and then authorizing that address to kind of sign off on this transaction and allow you to lock in this reservation at this hotel based upon the availability that is listed according to those smart contracts and how they interact with each other on the blockchain. And again, just makes for a smoother process, less kind of back and forth between travel agencies that are going to want to talk to hotels and figure out an appropriate rate, and then hotels, smaller independent hotels that have to actually manually go through this booking process and understand what's going on with their customers, are going to, or more equipped or better equipped to deal with this blockchain technology. That's at least according to Book Local on a Reddit AMA. But again, there's more advantages for these smaller companies with making sure that all of their customers, all their travelers are accounted for, and we're able to have a smoother user experience and kind of reduce some of these commission costs and make sure that the information about all these bookings are, again, just everybody knows what's going on, there's no confusion, and again, just an easier process all along. So again, that's just one example of what goes on with blockchain. For what else you should read today, we are going to focus on numero uno right here with Ian Balina. He was finally hacked. And this is obviously terrible, but honestly, if you follow him on Instagram or if you follow him on Twitter, it's been a long time coming. Ian has been posting tweets of he's been posting portfolio snapshots of his own, which amounts in the millions and millions of dollars. So again, it's terrible, but again, we'll get into that more. These next three posts are all Medium articles that I find super interesting. This first one was written by Chris Berniski. Obviously, I'm a huge fan of him and his work with ARK Invest, and also at Placeholder VC. And he also wrote this with another individual. I'm forgetting his name, but again, these three articles are just, again, going into crypto economic theory and cryptocurrency theory, and looking into the market from an opinion perspective, and also what could potentially happen as adoption quickens in the space as the years go on. A genome sequence of a virus was transferred over the Ethereum blockchain. So again, this is where we're seeing these different, I guess, the ways that we can innovate with this blockchain technology. So again, you don't necessarily have to transfer monetary value. You can transfer other information and other data as well. It's just a matter of who owns that data and who is entitled to, I guess, access that information, and then from there how they're able to utilize that information and what rights and uses they can kind of go forth and kind of do with that data. So again, it's This is just showing another flexibility of Ethereum's blockchain and of the power of blockchain technology to securely transfer data. And again, this I'm sure has so much potential for the healthcare industry, so much potential with transferring data between, again, just different doctors and different, again, researchers about certain experiments that they're going on, and making sure that that data is secure when they're sending information over for their experiments. Factom, they partnered with FPT software to develop technology for a platform creating auditing records. Again, if you want to look into that, Factom has been around in the space for a while. And again, we're just seeing more larger players find, or I guess establish themselves with these blockchain companies because they understand where they can finally actually achieve synergies with these companies involved in the space. And again, I feel like that's only going to quicken as we go on throughout 2018. Coinbase acquired Cypher Browser. It's a mobile Ethereum wallet web browser. Again, I don't know if this is coming out of Coinbase's venture arm that they recently announced, but again, we're seeing, again, more acquisition, more diversification of these cryptocurrency funds, these cryptocurrency exchanges, just, again, sticking their hands in different honeypots in the space to diversify, to look at other investment opportunities and growth opportunities for the market. But again, just helping grow familiarity with the technology and hopefully getting some additional funding, or likely getting additional funding and guidance and strategy and whatever Cypher Browser may potentially need in order to potentially get the next leg up in their growth and their roadmap, hit those targets as we go later into 2018. Havin, they're a decentralized payment network. They launched their first stablecoin that's backed by Ether. By the looks of the article, it seems like Havin wants to launch additional stablecoins. One of them which would be backed by their actual token. I believe they're using 2 cryptocurrencies in their business model. But again, pretty interesting to see what's going on there. Stablecoins are going to be what looks like a huge point of discussion in 2018 and moving forward, because that's obviously going to be a huge issue. Well, stablecoins, in better words, provide a huge solution, or a massive solution, to folks that want to hedge out of I guess, Bitcoin and lock in profits in something, in a cryptocurrency that isn't going to be subject to this volatility in the market. So if you wanted to lock in profits for a BTC loan or an altcoin loan, and you can close out in a stablecoin that's backed one-to-one with US dollars, then that's a huge advantage for traders that don't necessarily want to hedge into BTC and continue to be subject to volatility in US dollars. So again, this is going to, once stablecoins have success and have legitimate proofs of concepts, then that's another reason that investors might want to jump into the space, because they realize that they aren't subject to, again, these really aggressive swings in the market, and they can actually secure their investment and kind of avoid all of that hassle of current market practices. All right, so again, Ian Balina, he tweeted this out early this morning, saying that he was hacked. He was going on a live stream actually about hacking, which is pretty ironic, quite honestly. But again, he says he's not worried about the money. He's learned his lesson, and he just wants to catch the hacker. But again, this is, and looking at the comments here, there's a lot of people that are saying, "Oh, you deserved it, Ian. We don't trust you. We don't care about you." That's not the approach you should be taking. I personally think that's, again, it's terrible, and sure, I don't think that having portfolio snapshots is the right approach by any means. I don't think you should ever be disclosing your funds. There's other ways to do it. There's other ways to show your investments. But again, this is what Ian did. He made his bed, and now he has to sleep with it. But again, there's a lot of people coming out saying, like, oh, like, again, just bashing him, which, again, I think that's pretty messed up. And if you want to be supportive of people in the community, definitely do that. But again, if you're just going to troll or kind of bring them down, that's not going to be productive. What I did find interesting is that there were a couple folks, specifically this Bob Arctor character, that responded to Ian's tweet saying that he found the hacker, you're avoiding taxes, and what's the reward? So it's kind of questionable here. And Charlie Shrem also comes in, and he says, so he moved all the tokens in Ether into one account last week, and that's actually the account that got hacked. So this is kind of a very interesting circumstance here, where if Ian's been involved in the space so long, you would kind of reckon that he would have the sense and know-how to not centralize the location of all of his private keys into one location, which would make it very susceptible to a hack. Again, we're thinking of these honeypots. If somebody, for some reason, learned of Ian kind of doing this, then it would make sense for hackers to kind of focus all their efforts onto stealing all of his coins. And again, he lost about $2 million in the process. So it looks like, is it a coincidence that it's right before taxes? And again, it's Ian's UK resident, so apparently I'm not as familiar with the tax laws there. But I did see a comment online saying that he actually technically did not have to pay taxes at this moment for any reporting that UK citizens already had to do. But again, if this is an effort, if this is an attempt by him to potentially evade taxes, according to cryptocurrency conspiracy theorists, then potentially this could be the way of doing it, or it's just a kind of a poor move by him, a huge error, and obviously leading to a huge loss of value. So again, at the end of the day, please do not post your portfolio snapshots. Please do not reveal your identity to anybody online. Nobody has to know that you make any money in crypto. Nobody has to know what you're doing in crypto. Again, it's just you're putting yourself at risk. And again, it's if you want to do it to show people, look, I made it, aha, that's not necessarily going to help you in the long run. Again, it's just you have to think about when security is offloaded to the outer fringes of the system and onto users. There's a lot of responsibility, and a lot of that is making sure that you know how to safeguard your funds. And this is very much a huge red flag. And again, people have been waiting for this to happen, waiting for this kind of thing to happen with Ian for months. Again, not wishing him the worst, but it's just when you do this, it really just gives you kind of secondhand angst and anxiety about what could potentially happen. And clearly didn't work out well. Alright, so for bulls and bears, now boarding Börse and Barclays. I'm not sure if that's how you pronounce Börse, but again, so Börse is the second largest German stock exchange to my knowledge, and their subsidiary, Sala Labs, is launching a trading application called Bison. And again, this is pretty similar to Robinhood in the sense where there's zero trading fees, and they're offering Bitcoin, Ethereum, Litecoin, and Ripple for initial trading, with more cryptocurrencies and digital assets being rolled out in the future. And a feature that makes Bison stand out from other applications is this Crypto Radar, which is a social media tool that analyzes sentiment in the market. And again, it's looking at tweets to identify what's a white horse, what's a dark horse, what's a white knight, what's a dark horse, what projects are going to, or kind of on the up and, or kind of, I don't know, gaining some prominence, what could potentially be set for a bull run or kind of a rally in the market. So again, what's also interesting is that this is the first trading app that's backed by a traditional stock exchange. So there's Goldman Sachs Investment and Circle, and their investment app, which is kind of connected to these investment banks, but again, there's no stock exchanges getting involved here. And when you think about the incentives and the reasons for getting involved here, it makes sense if Börse has a related app for equities markets and traditional markets, and similar to Robinhood, they've already have their free investment app for stocks. So again, it makes sense that they're kind of diving into the crypto space to keep the attention of their users onto their platform, and again, just making sure that they're able to retain as many users as possible, and again, offering more attractive features and kind of staying on top of what's going on in the market and carving out their chunk in the crypto space. So again, looking at what could potentially happen in the future. Maybe other exchanges are looking into this. Maybe other stock exchanges, as they start recognizing cryptocurrencies, they could be doing something similar. So again, just something to keep in mind. For Barclays, they are, according to two folks familiar with the circumstances, Barclays is launching their own cryptocurrency trading desk. And there's going to be a focus, allegedly, again, there's no confirmation from the actual bank, there's going to be a focus on cryptocurrency hedge funds and institutions. So again, this isn't the first time that Barclays has gotten involved in March, they partnered with Coinbase. Coinbase opened up a bank account with Barclays. So again, this is the first time that a cryptocurrency exchange partnered with a bank. But again, on the bigger picture, there's IPOs are no longer the golden child of VCs and of kind of these larger institutional investors. In my opinion, and kind of what I've been seeing in the market, there's a flood of capital heading into ICOs, and because of that, these banks are noticing, these banks are understanding that there's kind of this attention shift and this seismic shift over to the ICO route rather than IPOs. So again, other banks are obviously noticing this, whether or not. So right now, Barclays is the only fund that has announced an involvement for a cryptocurrency trading desk, I believe. I don't think Morgan Stanley has announced one yet. Goldman denied rumors that they were opening a trading desk, but again, that's just a press release. I would not be surprised at all if in Lloyd Blankfein's office he's rolling out a crypto trading desk in the future. Again, these banks, what they're saying on paper in the press and what they're kind of doing behind closed doors are two entirely different things. There's always two games going on at once. And again, Barclays is definitely not the only bank that's kind of looking into this. I'm sure that other players are considering getting involved in the space once they realize what they want to do in the market. Again, you can't just necessarily say, okay, like we're going to launch this trading desk and then not have a plan of action. You have to understand what kind of sectors you're going to target in the market, and it seems like these funds and these banks are going to go after these larger players. So again, hedge funds and institutions, helping them facilitate trading and helping them kind of go through and navigate the space. So again, we'll see what goes on there. We'll see if Barclays comes out with any confirmations, but that's just my 2 cents on what's going on in the market. For Verge, again, we've been covering Verge before. They look like they're on the verge of an exit scam. There's, again, just looking in the news today, you're going to probably see that there's a lot of articles that come out saying that Verge looks like they're becoming increasingly shady. And tomorrow, April 17th, they're supposed to announce a partnership that Verge was supposed to announce earlier than this. They went through a crowdfunding campaign where Verge asked the community and other users to raise 75 million XVG to announce this partnership. And again, it's yet to be announced. They pulled back, and of that 75 million XVG, 3.5 million of that was moved over to an online exchange wallet. I believe it was 3.5 mil XVG. Yeah, I think that is right. But again, either way, the point is that these funds that were supposed to be for this partnership and the funding of this partnership was moved to an online exchange. And what can you do on an exchange wallet? You can liquidate your positions for US dollars or Bitcoin and then US dollars in this sense. But again, when these people obviously saw that there was a withdrawal from the address and it went over to an exchange, so folks in these trading groups or these chat groups for Verge were like, hey, look, like what's going on here? Like, can you please explain what's going on? And the Verge development team came back and said, oh, they're moving it from their wallet and Ledger needs to be paid. And again, thinking about like who's Ledger? Ledger is a cold wallet service that allows folks to store their funds offline, not connected to the internet, and again, secure. Ideally, you would want to have a cold wallet instead of keeping funds on a hot wallet, such as a cryptocurrency exchange. But again, Ledger, so Fred de Villamil, he is the VP of engineering at Ledger. He came out and replied to a tweet from Whale Panda, and a couple other folks replied to that as well. And Fred basically said, hey, look, Ledger doesn't charge for any coin integrations anymore. So, like, we either do that through the community or we follow our own roadmap. So whatever you guys are talking about here about this money that Verge needs to pay us, that's not true. That's not happening. So there's clearly this dissonance and this gap in communication that's going on between the Verge developer team and what's being said by Ledger. So again, this is a huge red flag. If I'm investing in Verge right now, which I'm not, I actually don't believe I ever was, but again, if you were invested in Verge and you didn't know about this, I would really recommend you kind of take a look back at what's been going on in the news and understand like why there's such a disconnect here. And again, there's additional stories don't check out between the Verge development team and then also Verge community members. So this was after the tweet from Fred. Somebody in a Verge currency group, another developer, said that they started the conversation with Ledger before Fred even began working for them, and they got pricing for integration. But again, you're looking at a tweet from another person involved in the project. This is after Fred actually responded, saying that we obviously didn't talk to Ledger so far, we just separate the funds for the single project. So again, you would think that if these people that are working for Verge knew what was going on and everything was very clear cut, that they would have the same story. So the fact that there's not even communication going on between these groups to understand that if they wanted to exit scam and liquidate their funds, they would do it in a way that isn't glaringly obvious that they're doing this kind of scam. So again, it's kind of mind-boggling that all of this just lines up and turns out to be just kind of this BitConnect 2.0 potentially. But again, this is kind of what we're seeing. There's a lot of people that again are just realizing right now that Verge is super shady, and this isn't the first time that this has happened. So again, just do your homework if you're involved, and we're gonna see something pan out tomorrow, if not tomorrow, in the next couple of days, because again, there's this it's excuse after excuse, and sooner or later the market's going to react, but right now it hasn't. Verge is a $2.7 billion company, which is startling. So if you think there's a bubble compared to what could potentially happen, I would definitely say that if Verge does turn out to be a scam, then clearly it's a sign that we have a way to go with eliminating these shady projects. So again, just my 2 cents. And going on to education, looking at proof of authority with these consensus mechanisms. So proof of authority is a spin on proof of stake, and when I guess backing up a little bit, we have to look at what is going on with blockchain systems and blockchain networks. So Vitalik Buterin calls this the blockchain trilemma, the scalability trilemma, where blockchain systems can only at most have 2 of the following 3 properties at the time. They can be scalable, they can be decentralized, or they can be secure. The second that you try to grab all 3, you have to give up another. So again, let's say you wanted to have a very scalable blockchain but very secure. If you want to have that means you're going to have to give up on some of those decentralized aspects. So again, that would be looking at, I guess, a private blockchain versus a public blockchain, or kind of having fewer validator nodes involved. Again, don't really take my word for it. Take a read on what Buterin actually has to say about the subject. But again, just understand it's like college. If you can only have 2 things: good grades, good sleep, or enough sleep, and social life. So again, you can only take 2. Obviously, people try to find their way around that, and it works to varying degrees with everybody. But again, it's right now, blockchains, in a perfect world, you could have all 3, but again, you can't the way we look at it. And looking at proof of stake compared to proof of authority, this is again just like the way I've been looking at it, the way I analyzed my research for proof of authority versus proof of stake. Proof of stake stakes the network, or each node is staked on monetary value. But again, so again, this is looking at, let's say you need 10,000 coins to create a master node, and that's staked on the network to serve as one of these validating nodes to confirm whether or not, whether or not these nodes can validate the next block in the transaction. So again, let's say you have somebody named Dow and somebody named Jones. If Dow has a net worth of $1 million, well, let's say they both have a net worth of, $1 million, but all right, so backtrack. Let's say Dow has a net worth of $10,000 and Jones has a net worth of $1 billion, and to make a master node on one of these blockchains costs $2,000. So again, if Dow is creating a master node that costs $2,000 and his net worth is $10K, that's 20% of his net worth that is tied up into this blockchain system, and there's going to be theoretically a larger incentive for Dow to act in the best interest of the blockchain network to kind of validate these blocks and these transactions in a way that aligns with the interests of others in the network. However, with Jones, if his net worth is $1 million or $1 billion, and the masternode is only $2,000, he's less incentivized to create or act in a way that is going to be in the best interest of these blockchain networks, because he's able to take the hit a little more than Dow would be if he were to kind of act, if you were, I guess, to go rogue or AWOL or anything, whatever way that led him to act in a different way than other folks in the network. If he were to be penalized, Jones says, no sweat, that's not an issue for me. I have more funds elsewhere. So again, there's this kind of, again, whether or not you have, what's it called? The financial capital is going to be different for everybody. So again, you can hope that incentives are aligned, but depending upon the net worth, there is the potential for there to be some distance here. Whereas with proof of authority, you're staking the reputation of somebody's actual social reputation on, I guess, on each node. So here, if you were to act in a negative way, or if you were to go against the network, then your social reputation is on the line. Then you're labeled as your actual reputation in social channels takes a hit. So again, that's less elastic than, I guess you could say that that's a little more inelastic than a node that's based off of purely financial capital. The fact that social capital has less flexibility here shows that, I guess, there's probably more of an incentive for folks to kind of act in the best interest with the network. So again, that's really the key. That's really the gist of proof of authority versus proof of stake. And in terms of a short-term scaling solution, that's where proof of authority is kind of seen as a potential means for a short-term solution. But at the same time, you kind of have to give up this. You kind of have to give up the decentralized aspect of the network, because for proof of authority, if you're selecting nodes to serve as validators, then you're kind of, I guess, you're picking these groups to say that, again, of all the nodes in the system, you're taking a select bunch of those. So again, it's turning into this private permissioned type of blockchain, and it would work therefore for private blockchains. It would work for banking consortiums, insurance company consortiums, any consortium of sorts that wants to have a permission kind of aspect over that blockchain network. And again, if you want to make sure that these nodes are going to act in the best interest, and there's a couple considerations that you have to take into account. Number one, you have to make sure that there's a standard, robust process to identify these validators. You have to make sure that they're scarce and that there's a reward, kind of this attraction to being a validator. So there's kind of a desire to hold on to this title to make sure that people want to be validators and they want to act in the best interest. And on top of that, you have to have a process for establishing authority. So how do these validators, how do they get this reward to validate blocks, and kind of what's going on here. And for examples of proof of authority, if you want to look into more examples in the blockchain space, Kovan and Rinkeby, again, apologies if I'm butchering that, I probably am, but those are two Ethereum testnets that are utilizing POA, and Giveth, Tomo Chain, Rublix, Swarm City, Colony, GoChain. Those are all other examples of blockchain projects, upcoming ICOs, other examples in the space, or other projects in the space that are kind of getting involved with proof of authority. So again, from what I read on Medium, this POA may not be the ideal long-term solution, but in terms of short-term options to kind of get around this dissonance with proof of stake, with the monetary aspects of, I guess, securing a network, doing it through a means of one's actual personal identity could be another way to, I guess, kind of see what goes on with these crypto economic incentives as time goes on. So again, that's it. That's it for today's edition. Thanks again, guys. I appreciate it again, as always. I know we're getting back into the swing of things again. We were in San Francisco last week. But again, if you want to subscribe, if you want to share this Twitch stream with everybody, with your friends, please pass around our Twitch stream. We're looking to grow our audience. We want to start turning these live streams into into I guess more of a think tank with people where questions can be pitched and I can share my thoughts and my opinions on the market. As we get more of a following, we're going to want to have other people involved and kind of have more of a, again, just a bit more chatter going on. You're not going to have to hear my voice all the time. I want to have people on as well, and again, take part in the discussion and just hear other opinions involved in the space. So again, thanks so much. Follow us on our other channels if you want to hear more. But otherwise, we'll see you back here tomorrow. And until then, just keep on tab what's going on with the market. I'm sure that there's going to be a couple big changes coming on in the next couple days. Whether it's up, whether it's down, we'll see. But the Bulls and the Bears are going to be going at it. So, all right, guys, that's all. And again, thanks a lot. Cheers.